So they've got a lot of money because they've been selling assets. So they have been divesting, taking advantage of the low interest rate environment means the yields have been very low, and therefore they've been able to sell to external or non-UK as well as sort of domestic investors. So they've been, they sort of acknowledged that there's almost like a peak in the cycle of values, and therefore they have been selling assets and therefore producing the cash. What are they doing with that cash? I think they're sitting pretty, slightly concerned whether LTVs will deteriorate as valuations certainly have deteriorated on the retail. Question whether office will follow suit in the near future. But I mean, they're not as LTV covenant headroom-wise tight. So a lot of them, although they have headline LTVs of, I don't know, 40-ish or coming up to 50, they're not like the sort of secured finances of, say, an Into, where they're right up against the buffers on their secured facilities. And most of the property companies are unsecured funding anyway. What are they also doing with that cash? They're waiting for distressed sellers. So they will pick up the companies that have distressed assets or indeed distressed financing of good assets, and therefore pick up those with that powder that's dry. But if you look at what Land Securities and British Lands are doing at this world, they have a fair amount of office development, which are their own schemes, whether that's Broadgate still, or whether it's part of Regent's Place or Paddington, or Land Securities in their Victoria territory, and they are using that cash to go for the office developments. And just generally also taking advantage of the low interest rate environment to refinance all that debt at low coupons. So they've often reset all those coupons, those 5-6% coupon stuff, which is all now down at 3 or less than 3%. So that's what they were doing. They're effectively preparing themselves for the unknown.